What's your online broker got?
Hello?
Fidelity. Smart move.
Interesting moves in gold today with spot prices up and future prices down. So that in mind, we want to take a closer look as we return to our Wednesday Commodities Corner with our commodities reporter, Sandra Smith, along with Kevin Kerr. Kevin is president of Kerr Trading International, and he's joining us this afternoon from Stamford, Connecticut. Kevin, nice to see you. We haven't chatted with you in a while.
Well, good to see you, Ellen.
So one thing question we've got to ask, given the activity of the past 2 days, is gold still the safe haven asset that we traditionally think of it as?
Well, you know, it's interesting what we saw with gold yesterday. You know, we usually have considered gold a flight to quality vehicle. In other words, whenever there's times of uncertainty, we've seen people flock to the Swiss franc or gold. And yesterday we kind of saw the opposite. We saw money being pulled out of gold, and we saw a lot of money flocking into the bonds, which is also a flight to quality vehicle. But gold has really kind of changed. You know, it's not the old school material that we used to think of it as, and now it's more of an asset class. And since we have so many ETFs and equities invested, individual investors invested in gold, it kind of seems to move more with the stock market than with the flight to quality argument.
And given that, are folks getting caught short on that? I mean, I know yesterday I was checking the price of gold several times throughout the day to make sure that I was actually reading the number correctly.
Well, you know, it was a $20 or $25 move yesterday, but we've seen those recently even without such a dramatic move in the stock market. So a $10, $15, even $20 move in gold hasn't been that significant, really, if we put it in perspective. However, I mean, yesterday the whole market activity was so volatile that, you know, I think we saw everything collapse and, you know, without regard. And also, you know, it hit a lot of technical areas there on the way down. And just like it did in the equities market, we saw a fall off from that.
Well, Kevin, you're still bullish on gold, right? I read your newsletter this morning. You're still telling your customers to buy gold, correct?
We are, and we were talking about that a week ago. We covered our April positions, and we took money back on our spreads. We lost some money on them, but we recovered a lot of equity, and then we initiated new positions in December spreads, and we are long-term bullish on the gold, so we're looking for at least an $800 price, probably by summer, maybe $750, $800 by the summer.
Well, then if we go back to your comment about what you said about the Treasury market, and we saw two-year highs yesterday there, they're off a little bit today, don't you see that as essential? You know, to see some sort of weakness there for the gold really to progress?
Yeah, we really would need to see that, Sandra. I completely agree with you. And, you know, yesterday's activity, I'm kind of just discounting as a one-day phenomenon. I mean, we're already seeing somewhat of a recovery in gold. We're seeing bonds back off a little bit. And I think we have to wait and see what happens the next couple weeks to see what really shakes out from this.
Well, let's talk, given the disconnect that we're seeing in the spot prices and the futures prices and you know, some of this changing theories perhaps about how to view gold, let's talk about the real short term. What do you think gold is going to be trading off of, and what are you going to be trading off of?
Well, you know, short term, it's much more difficult than longer term. I think that the short term kind of volatility is concerning. Obviously, if the concerns out of China and purchasing power out of there and activity is going to slow down, that's going to slow down the gold buying, the year of the pig, whatever you want to blame it on over there. If that slows down, it certainly will put pressure on the gold price. But that's only if you subscribe to that argument. I don't think yesterday's activity was really indicative of that.
Well, Kevin, I think something that a lot of people don't realize is we do talk about that $25 sell-off yesterday, but at the same time, gold made all-time highs for the year, up at $692 an ounce before we saw that sell-off in the aftermarket trading. But if we're really talking about investment demand being the driver here, and we see this sell-off in China, where's that going to come from? And are we going to see any improvement in the physical buying?
I think we will. I mean, again, yesterday was a little frightening for everyone. What caused it? Why was it so dramatic in the equities market? But as we're seeing today, we're seeing some of those gold shares recover gradually. We think it's very healthy for the gold. I mean, here we've shown that the market can correct and recover within a day. And again, you know, it's slowly moving higher. The futures are slowly recovering while the spot market's moving faster. And that's indicative of a market that was oversold.
So, Kevin, real briefly then, what would make you a little more cautious?
Well, definitely if we continue to hear anything bearish out of China or the Chinese government, if we see a raising of rates, a tightening of policy, this would certainly put us in the concern area as far as gold, maybe staying at these levels or even going lower. China is a key player in this whole scenario. And oil prices as well. They fall into it. If we continue to see the oil trend back down below to $55, that will put pressure on gold as well.
All right, Kevin, Sandra, and I thank you. Have a great day.
Thank you. You too.
When we come back from a quick break, we'll have an update on world and national news. We'll have a final market check, see where stocks are trading.